This is going to be immensely beneficial video for long-term investing. So please do watch till the end. I think you will like it. Welcome everybody to Beat the Market, and welcome Sam again for another episode. And this is about a very special industry. So lately, I think the chip industry, actually semiconductor industry, has been in news quite a bit. And Sam, what's your thought on this? There was a lot of talk about chip shortage and what led to this situation, and how do you see the future?
Yeah, interesting. Welcome. Thank you. Good to be here with you, Rakesh.
Thank you.
It is very interesting. This whole the entire pandemic. We don't think of pandemics as being bull markets being born in the midst of pandemics. Usually we think of pandemics. Oh my gosh, I can remember sitting back in February or March of last year going, as things are just plummeting and wondering when was this going to end, and being surprised how quickly it ended after a mere the bear market after a mere
it recovered in like
6 weeks, 6 or 7 weeks.
Yeah, that was.
And
I was not expecting it at all.
It was off to the races so soon, but with government intervention and certain stimulus packages, etc. It throwing more candy at along with the unprecedented low interest rates certainly helped, but also we became more digital.
Yeah.
And we learned that we could work from home, we could get our stuff delivered from Amazon, and we could have Zoom calls, and it was a real test, a successful test of the digital economy. And it was such a success that the world may never go back to the way it was with all of this overpriced commercial real estate in New York or San Francisco.
Yeah, there was a lot of demand for personal computers too when people working from home.
There certainly is. So, so going back to your question about the chip shortage, so it was on the demand side was part of it, caused by the pandemic, and new demand for so that each of your kids needed to have their own computer or tablet to study from home and to go on the Zoom call, etc., and work from home. And you needed web cameras and all these kinds of things. But in addition, on the supply side, you had two shocks, which was a fire at a Renesas plant in Japan that produces automobile chips, and you had a power outage in Texas that lasted for several.
That was very unheard of.
Which, if you're in the middle of a 60-day process making a chip, and the power goes out, even for just a few moments, you can't just start where you left off. The whole batch is ruined, and you have to start all over again. At least that's my understanding. And it's a major setback, just like if you have a fire at a refinery or something, and you can see oil prices go up. So at any rate, it'll take a little while. It could take 60 days or so 60 to 90 days to get out of this situation. Automobile, another factor is, of course, for the grave consequences. Obviously, these were not the most expensive cutting edge chips like in an automobile. Often some of these chips only cost $1 or $2, and yet for lack of that, you can't sell a really high end car because these are these are the seats that go into 300 positions on a $150,000 Porsche or something, or whatever. They're not exactly necessities, but some of them. But these days, so for lack of these kinds of a few dollars worth of chips, a huge assembly line has to shut down for weeks. It's very, very costly for those automobile manufacturers.
Yeah, that's interesting.
But they'll get over it.
Yeah.
But the bigger picture is just how ubiquitous chips are in our lives. There are more chips out there than there are human cells. We're turning these things out at a rapid rate, and now we're told that we need more and more of them to power Internet of Things and to have the processing power to analyze big data.
Yeah.
That cars will churn out petabytes per hour or so to do autonomous driving and making all of that safe. And
yeah, and I know you always liked semiconductor, and are there companies within this semiconductor industry who are very bullish about on their near-term outlook and also long-term, because this is the chips, they're going to be part of our life?
Yeah, so the thing is that with the you always pay a price for investing in the highest growth markets and industries. Things are often expensive for a good reason. If NVIDIA is the company that is going to bring us, that's going to power autonomous driving in our cars, or and all the latest bonanza of gaming and chip and rather Bitcoin mining enterprises, and just the cornucopia of 21st century delights, then NVIDIA is going to be more expensive. It'll have a higher price earnings ratio, higher price to sales ratio, et cetera. I like to play it safer. I mean, I love NVIDIA and I own some, but I also love to sell picks and shovels to the miners, so to speak, and invest in companies, tried and true companies that build the chips that are involved in the 4 essential processes of deposition, etch, lithography, and metrology, that sell at substantial discounts to the rest of the tech sector.
So I think you are alluding to the semiconductor equipment industry.
And excuse me, that have, yes, sustainable competitive advantages in the semiconductor capital equipment industry. The also called WFE, or wafer front end industry. So these are companies that are very, very special, that have that each one has its important function at the front end of the semiconductor building process. And it is a very complex and technically challenging task that they do. And they are more collaborative than they are competing against one another. They are collaborating closely with their customers to solve very complex problems. It is extremely costly and challenging to build these at these 5 nanometer cutting edge geometries.
Yeah, I know you described those 4 processes: deposition, lithography, etch, and metrology. And this company are dominating this part of each process, and so that makes sense. They're collaborating, not competing each other.
Right. These are indispensable companies. The world as we know it would not exist, and we would not be able to continue to get the benefits of Moore's law without each of these four companies. And yet they sell at a discount to the market. And I think there's a misconception that these companies are more cyclical than they actually are. Now that I think that's lifting somewhat as it's becoming more and more obvious that these chips are going into almost everything, our kitchens and our kitchen appliances, as well as our cars. So that cyclicality is being reduced, and it's slowly dawning upon people that these are growth companies rather than cyclical companies. And even though they're 40 and 50 years old, they're not fully mature. They're very exciting, dynamic companies, and they're very cheap relative to the rest of the technology market, where people are paying up for much more risky enterprises.
Yeah, absolutely. Could you name those companies and what their specialty is? What specific tasks they do in the process?
Yes, I'd be happy to. So Applied Materials for deposition, ASM Lithography for lithography,
Lam Research,
Lam Research for etch, and KLA for metrology and inspection.
Oh, okay. And they're very specialized in their own niche.
That's right. As I say, their area is for every high-end chip that's made, their equipment is an absolute necessity, and it's so complex that only they possess the expertise, the experience, and the ability to make these highly specialized, complex tools.
I think that's pretty kind of a very dominating position in that sense.
Yeah, I mean, investors don't often get a chance to invest in monopolies unless they're public utilities, which are a very different kettle of fish with rates set by public regulators. In the tech world, to have monopolies means you have a barrier to entry, or else you have nothing at all, because it's not an interesting market. This is an extremely interesting and lucrative market. These companies are solidly profitable with balance sheets like Fort Knox, and they have been at this game for between 30 and 50 some odd years, and know how to do this well. And so you don't have that kind of risk that you have with many other companies in tech, selling it much bigger price to earnings ratios and much bigger price to sales ratios. But these companies are equally dynamic, exciting, and there's a difference between speculation and investment that I think is not understood by most new investors. In fact, I use that term. A lot of people are speculating on wild things without really realizing how much risk they're taking. I'm more of a long-term investment kind of guy. I'm not so much into market timing. I think these is fitting well with a kind of a patient buy and hold approach. You don't have to worry about these companies. They'll be in business for a long time.
Exactly. And you also talk about this Moore's law, and how does that apply to this company? I think
these are Moore's law companies. These companies have Moore's law is the prediction that computers will become twice as densely packed with transistors every year and a half, twice as powerful, twice as, which leads to them also becoming faster, less power consumption, and cheaper, and thus enabling undreamed of applications with every technology node that is developed. So it's compared. It's like the analogy goes to like cars that 30 years ago, if it could drive 120 miles an hour. If cars got these kinds of efficiency gains, they would be going 10,000 miles an hour today. Computers that would be take up your entire basement, you now have here in your pocket.
Exactly.
So through miniaturization and cost reduction, we can do undreamed things. This is what Moore's law is about, and so I'd like to say, well, I'm a Moore's law investor because if you have the benefit of Moore's law going for you with these kinds of with these stocks in your portfolio, it helps. It gives you a little bit of an edge, and maybe instead of the 10% of that a typical S&P 500 portfolio can get you return per year, maybe you can get 13 to 15%, which over time compounded gives you a lot more money in your pocket when you get to be as old as I am.
Yeah, interesting.
So
yeah, these companies, they are definitely, I think, very powerful, and they have huge value in this new era of digital era. Yeah.
Now, that's not to say that there isn't some controversy. Some people think that Moore's law is coming to an end, and or is near its end, and there is some truth to this. You need to ask yourself, well, will we wake up one day and have a completely different world, a completely different process for making computer chips? Whether it's quantum computers or some other kind of process? I would say to those skeptics that, I mean, people have been predicting the end of Moore's law for 30 or more years, but we keep pulling rabbits out of the hat through various technologies that these companies are coming up with, such as EUV, which is extreme ultraviolet lithography, solving the complex problems of the physical geometry shrinkages through extreme ultraviolet lasers. We keep somehow being able to do this, but for those who are worried about this, will we be at the end of Moore's law, where these computers are new technologies will come along? I would say we'll probably get some. It'll probably be telegraphed in advance. This disruption is not going to occur. It's not going to completely blindside us. But I'd say at least for the next 10 years, it's not going to happen. These are how fabs are. These are the equipment that all the leading edge fabs use, and there is no change on the horizon except incremental change, and brought to you by these 4 companies. So I think they are they deserve their price earnings ratios and their price to sales ratios, which are at a pretty good discount to the rest of the tech market. PEs are in the 19 to 25 range typically, and price to sales ratios are between 5 to 10 for these companies.
Yeah, thank you, Sam. That was very insightful, and I hope our viewers they will learn a lot from your experience in the industry, and I hope they consider buying some of these semiconductor capital equipment in their portfolio.
I hope so. I think it's well deserved.
So thank you again, viewers. Thanks for watching. We'll be bringing more episodes with Sam and learn from his experience and wisdom on stock investing. Please do subscribe this channel so you get my videos first. It also helps with the YouTube algorithm. Do hit the subscribe button. Thank you. We'll see you next time. Bye.